Welcome to the deep dive. This is where we take the information you need, the sources you're looking at, and, well, we boil it down to the key insights fast.
Yeah, think of it as your shortcut, getting you up to speed without drowning you in data.
Exactly. And today we are digging into Vishal Mega Mart Ltd, specifically their recent Q4 fiscal 25 and the full fiscal year 25 earnings.
We've got the earnings call transcript, the press release, the investor presentation, the whole lot.
Right. And our mission really is for you, the learner out there. We want to give you a clear, kind of engaging picture of how Vishal Mega Mart is doing and, importantly, where they seem to be heading.
We'll be hitting the main points: revenue, profits, store growth, those all-important own brands, and their quick commerce stuff, too.
Basically answering the big questions about their performance and, their game plan. So let's get started.
Let's do it. We're basically your guides here, trying to pull out what really matters from all this info.
Okay, so financials first. The headlines. Q4 FY25, the last quarter, revenue hit 2,547 crores.
Which is a 23% jump from the same time last year.
Yeah.
Pretty strong.
Yeah, and for the full year, FY25, the total revenue, 10,716 crores. That's up 20.2%, so definitely an upward trend.
It is. And if you drill down a bit, same-store sales growth, SSSG, that tells you how the existing stores are doing, right?
Right. Year over year for the same set of stores.
Exactly. So for Q4, that was 13.7%, and for the full year, 12.3%.
Okay, though I did see in the press release they mentioned slightly different reported numbers, like 13.4% for Q4 and 11.8% for the year.
Yes, good catch. We talked about that on the call. The difference between reported and adjusted SSSG, it mostly comes down to cannibalization.
Meaning a new store opening nearby takes some sales from an older one.
Precisely. And also temporary dips from store refurbishments. So the adjusted figures, the 13.7% and 12.3%, they're trying to show the sort of underlying growth in the core stores, stripping out those effects.
Gotcha. Makes sense. Okay, so that's sales growth. What about profitability? How much are they actually making?
All right, so gross profit for FY25 was 305.27 crores. And the margin, the percentage, improved. It went up to 28.5% from 27.7% the year before.
Okay, nearly a full percentage point increase. That's quite healthy. What's driving that?
Well, a couple of things they highlighted. One is just scale as the business grows. They get better deals when sourcing products, better buying power.
Standard benefit of growth, yeah.
But maybe even more important is their private label brands, their own stuff.
Ah, yes. We'll dig into that more later, but how did it impact the margin?
Significantly. The contribution from their own brands went up by 135 basis points.
Yeah.
So 1.35 percentage points. That's a direct boost to the gross margin coming from those in-house brands.
Oh, okay. That's a clear strategic advantage then. Controlling the brand means controlling the margin to an extent.
Exactly, especially in a value-focused market. Okay, so moving down the line, profit after tax, PDT. The bottom line.
None of the numbers there.
For FY25, the reported PD was 63.20 crores. That's a 5.9% margin. They also gave an adjusted figure pre-ESOP costs, which was a bit higher, 67.61 crores or 6.3% margin.
Okay. But the really striking thing seems to be the growth year over year, right?
Absolutely. Reported PT jumped 88.1% in Q4 compared to last year's Q4. And for the full year, it was up 36.8%.
Huge jumps. So whatever they're doing, it seems to be flowing through to the actual profit pretty effectively now.
It really does seem like their strategies are starting to pay off in terms of profitability. But, it's not just about tweaking the existing business. They're expanding a lot.
Right, the store expansion. What do they say there?
They added 90 new stores in FY25.
90. Wow. So that brings the total to
696 stores across 458 cities, and the total space is 12.2 million square feet. It gives you a sense of the sheer scale.
That's a massive footprint. Are they planning to keep up that pace?
Seems like it. They didn't give a hard number for FY26 on the call, but they said plans are in a similar ballpark. And the long-term aim is definitely to keep adding more stores each year.
And where are these stores going? Are they focusing on big cities, smaller towns?
It's interesting, actually. It seems like a mix. They mentioned hitting double-digit store counts now in Kerala, so they're clearly embedding themselves there.
Okay.
But are also testing the waters in new states, like Gujarat and Maharashtra, with pilot programs, sort of dipping their toes in to learn those markets.
Smart. Don't just rush in everywhere. And what about the smaller towns, tier 2, tier 3 cities? They have a lot of stores there already, don't they?
They do. And the strategy there seems to be about fine-tuning the store size, making sure the store footprint matches the potential of a smaller town to keep it viable, keep the revenue per square foot, consistent.
So smaller stores in smaller towns generally.
Yeah, they mentioned the trend for new stores is towards smaller formats. It makes sense economically.
Okay. And looking forward, any specific targets?
Yes, they identified 17 towns with over 1 million people where they don't currently have any stores, like Pune, Nashik were examples.
Yeah.
Virgin territory for them,
Big opportunities there.
definitely. Plus, more potential to add stores in the 33 million plus cities where they already are. But the really big number they threw out was for towns under 1 million people. They reckon there's potential for around 800 more stores there.
800. So the focus seems heavily skewed towards going deeper into those tier 2, 3, 4 markets while still grabbing opportunities in the big untapped cities.
That sums it up well. A dual approach, really.
Now, you mentioned private labels boosting margins earlier. Let's circle back to that. It seems absolutely central to their whole model.
Oh, absolutely. Crucial. In FY25, their own brands made up 73.1% of their total revenue.
73%, that's huge. That's up from just under 72% the year before.
It is. And they explicitly call it out as a key differentiator. It's not just about the volume, it's the control it gives them, like we said. Pricing, quality, margin. It's all much more in their hands than relying on national brands.
And how do they price these brands? Are they just undercutting the big names?
They offer discounts, yes, compared to the national leaders. But they seem careful not to just race to the bottom. The focus is on driving adoption, making things affordable, getting people used to their brands. They said no immediate plans to cut those discounts further. It's about penetration first.
Right, balancing market share gain with margin. Makes sense. What kind of products are we talking about? What's the mix?
Clothing is the biggest chunk, about 44% of revenue. Then general merchandise, like homewares and stuff, is around 28%. And FMCG, everyday groceries and consumables, is the remaining nearly 28%.
Okay. And did they mention any specific star performers among their own brands?
They did. They highlighted their top 6, but focused on a few. Brink, that's apparel, and some general merchandise, mostly T-shirts. Apparently, its revenue doubled since FY22. It's now over 1,000 crores a year.
1,000 crores from one own brand.
But,
wow.
yeah. And Home Select, their general merchandise brand, also more than doubled since FY22. It's just under 1,000 crores. And then Yellow Hippo for kids stuff and some FMCGs, another big one.
Incredible scale for in-house brands.
It really is.
Yeah.
And even within FMCG, they pointed out their private brands are a huge part, maybe 35, 36% by value, but closer to 60% by volume.
60% by volume, so lots of people choosing their own brand for everyday staples.
Exactly. Driven by affordability, and they emphasized guaranteed quality.
Okay, so private labels are clearly a powerhouse for them. Let's shift gears slightly. Quick commerce, everyone's talking about it. How's Vishal getting involved?
They seem to be making steady progress. Their platform is available to customers near 656 of their stores now across 429 cities.
That's wide coverage.
And they've got 8.7 million registered users on the app.
Okay, and how does it actually work? Is it like the other delivery apps?
Pretty much delivery from the nearest Vishal store. The app shows what's in stock locally. They promise delivery within 30 minutes for immediate orders, and it's free if you spend over 299 rupees.
Standard quick commerce model, then. Is it actually contributing much to their sales yet?
It varies. Interestingly, in what they call underserved Tier 2 and 3 markets, it's contributing around 3–5% of that store's revenue.
Okay, noticeable.
But in more saturated markets like Mumbai or Delhi, where there are tons of options, it's lower, more like 1.52%.
So it's making more of a difference where physical organized retail might be less convenient or dense?
That seems to be the implication, yeah. And encouragingly, they did mention on the call that the quick commerce business itself is close to cash break even.
That's positive. Often these things burn cash for a long time.
True. So it suggests the model might be sustainable for them.
All right, let's zoom out a bit. The big picture. Market dynamics, competition, overall strategy. They operate in a tough space, right? Value fashion, value retail. It's crowded.
Very crowded. They acknowledge that. Their core strategy seems to be about owning the opening price points.
Meaning the very cheapest options in each category.
Essentially, yes.
Yeah.
The idea is to be the natural first step for someone moving from, say, local, unorganized markets into organized retail. Make it super affordable to make that switch.
Be the entry point.
Exactly. But importantly, it's not only about the absolute cheapest stuff. They're also consciously adding higher price points.
Ah, okay. Why?
To cater to existing customers who might want something a bit nicer for, say, a festival or a special occasion. and also potentially to attract slightly more affluent shoppers who might come in for a specific deal or item. So it's broadening the appeal.
Catering to the entry level and giving existing customers reasons to trade up sometimes.
You got it, trying to capture a wider slice of the consumer wallet.
What about the practicalities? Like finding locations for all these new stores, is that getting harder?
They said they haven't seen a recent increase in difficulty, but finding good quality, legally compliant space, especially in those smaller towns, is just an ongoing challenge. It's not always easy.
Which explains why they're open to build-to-suit options sometimes, I guess, where a developer builds it specifically for them.
Precisely. And on the people side, labor, they mentioned the constant need to recruit and train. The retail industry is still relatively new in India in its organized form, so building that workforce takes continuous effort.
Understandable with that kind of expansion. Did they say if the growth, that same-store sales growth, was consistent everywhere?
Yeah, they actually made a point of saying it was consistent across all regions, east, northeast, south, west, and across all city tiers 1, 2, and 3.
So the demand seems pretty broad-based geographically. That's a good sign.
Definitely. We also got a figure for the average bill value. It's around 875 rupees.
Okay, per transaction.
Yep. And the number of bills, the number of transactions in their like-for-like stores is growing about 10% year over year.
So more people are shopping and the average spend is holding up.
Seems that way.
What about store economics? How long does it take for a new store to become profitable, typically?
They said the typical break-even point is around 18 months.
18 months. And does that apply even to the smaller stores in smaller towns?
Yes. They specifically said that holds true even in Tier 2 and 3 towns, which is where, 70% of their stores are already located. And they clarified, break-even here means payback period, getting the initial investment back.
Right. That's pretty quick, actually. Shows the model works even in smaller markets.
It suggests it does.
Yeah.
And their view on the potential market, the total addressable market, or TAM, it's ambitious.
How so?
They basically consider it the entire population of India, including people currently not really participating in organized consumption.
Wow. So the strategy is to bring new people into the fold.
That's fundamental to it. Owning those opening price points is the hook to get people started with organized retail consumption.
And compared to the unorganized sector, what are the advantages they offer besides maybe price sometimes?
Well, the whole shopping experience, being able to actually touch, feel, try on merchandise, get opinions, that's often not possible in the same way in informal markets.
True. The try before you buy aspect.
And a big one they highlighted, their return policy for their own brands. They said it's no questions asked for quality issues, even if you don't have the bill. That builds a lot of trust, especially for consumers wary of quality in low-priced goods.
That's a powerful trust builder, yeah. Okay, so wrapping things up, if we boil down this deep dive, what are the main takeaways?
Well, definitely strong financial performance, both top-line growth and improving profitability. Strategic store expansion, really focused on penetrating deeper into smaller markets.
And the private label strategy seems incredibly successful, driving both value and margin.
Absolutely key. And then there's the quick commerce initiative, which is growing and seems to be finding its footing, especially in less served areas, and it's nearing break-even.
It all seems to circle back to this core idea, doesn't it? Making aspirations affordable for middle and, lower middle income India.
That feels like the central theme. So maybe a final thought for you, the listener, to chew on.
Oh.
How does Vishal Mega Mart's big bet on physical stores, value pricing, and deep penetration into smaller towns, how does that stack up against the rise of, say, online-only discount retailers and just general internet growth in India?
Will that physical presence remain their trump card? Or will the online value players force them to adapt their digital game even more significantly?
Exactly. It's something to watch. How does that physical-digital balance play out in India's value segment over the next few years? A fascinating question as you look at the broader retail landscape.